when you look at this chart, then what do you see? You see a bullish move that shifts to bearish, because we have a swing high here, a swing low here, another swing high here, and a swing low that got taken out. And what do you do when market breaks swings low like this? You start looking for a sell from supply zone, right? What if I told you that there isn't any valid shift yet and that this market is still strongly on a bullish move? The highs and lows you see here are just substructure move, and if you try to sell in this market with a structure like this, you will likely get taken out when the main move starts. Now let me explain. First, let me start from the foundation to explain everything. If you are new to the word swing high and swing lows, here is a brief explanation. Forex market move in three phases. You have uptrend when the market is on an upward version like this. Same thing with the downtrend when the market is on a downward version like this. Then a consolidation phase where the market is literally doing nothing. It's not going up, it's not going down, it's not trending, no clarity, just stuck in one place. How to identify a trend? In an uptrend, we want to see a market that prints higher highs and higher lows. In a downtrend, we want to see a market that prints lower low and lower highs, and this is what I mean. In an uptrend, when market is on an uptrend version like this, for this example, we want to see a market that prints higher highs like this, lower lows, higher highs, lower lows. Every high must be higher than the previous high, and every low must be higher than the previous high. That's why it's called a higher high and a higher low. That is for an uptrend. A downtrend is just the opposite. In a downtrend, we want to see a market that continuously prints lower highs, lower lows, lower highs, lower lows. Every lower high must be lower than the previous lower high, and every lower low must be lower than the previous low. That's why this place is called a lower high, because it's at the top, and a lower low because it's at the down, and every higher low must be lower than the previous low. I want you to keep this particular higher highs, higher lows, lower low, and lower highs something. We are going to need it in future. Now, why do many traders fail when marking out a correct higher highs and higher low and a correct shift from either bullish to bearish or bearish to bullish? Here is the reason. In an uptrend, for a swing low to be seen as a valid swing low, it must feature a higher high like this. And why is this so? Now, here is the point where we break down the logic behind this thing. Listen, Forex market doesn't move in a straight line like this. There's always a point where we see a move that goes against the trend like this. In an uptrend, this basically happens because some buyers at some point start taking their profits. And when that's happened, we see sellers try to take advantage of buyers' absence to push the market lower. Now, when sellers try to push this market down, buyers will step into this market again. And to prove that buyers are still in strong momentum, they have to push beyond the level that sellers came in from, completely taking out the sellers and remain the boss of the trend. Because of this constant battle between buyers and sellers who are trying to push down this market, every swing low and high has a story to tell. In a bullish move, a high is being seen as seller's entry door where selling pressure came in from, and a valid swing low is seen as buyer's last defense zone. When a swing low like this one doesn't feature a new break to seller's entry door, it only means that this swing low is weak and won't be considered buyer's last defense zone. Remember, I told you that in an uptrend, we want to see a market that continuously prints higher highs and higher lows, where every high must be higher than the previous high and every low must be lower than the previous low. Now, in this case, you can see here, this high is not higher than this previous one, so making this low not to be a valid low. Now, if you're still confused on this, there's a video on this channel titled Market Structure. In that video, I explained this in a clearer way that you will understand much better. This particular video is just a request from the comment section from previous video. If you would like me to talk about any topic in Forex, also leave your comment. I will talk about it. Everything I just said also applies to downtrend. Now, in a downtrend, everything is just the opposite. On a downtrend, a swing low is being seen as buyer's entry door where buying pressure came in from, and a swing high is being seen as seller's defense zone. So the logic is very simple. If buyers are going to take in control of this market, they have to clear the seller's defense zone. They have to clear this zone. And if sellers are going to continue taking this market low, they must keep breaking buyers' entry door, which is this one. They must keep breaking it low. So if market doesn't break low and it doesn't break high, then every other thing that happens within the higher high, the lower high and lower low is just a noise. Though this pullback and noise are tradable on a lower time frame. How to do that? Just check this video on market structure. You're going to learn everything you need to know in a clearer manner. And just like I said, this video was just a request from a subscriber. See you guys next time. It's your boy, Max.